All right.
Yeah, testing. It keeps showing me that it's going, setting up your meeting for Facebook Live. It hasn't hit yet. I got my laptop here. So let's see who's up and about this morning.
Yes.
It's late morning.
Saturday. It started off wet, but it looks like the sun is coming out.
It does. It
Choose
does.
not to get my walk on today.
Did you get it? You haven't started yet, have you?
No.
Yeah.
I didn't sleep in today. I had to.
Yes. Well, good. I'm glad someone got to do it. So you know my story. You know my story. I went chasing some Lysol wipes this morning, saw the post and said, let me just go ahead on and trek up to Alexandria.
Yeah.
No avail. They opened at 8. I got there a little after 9, and I missed the whole pallet. And they were huge. They were the large 5
Okay.
of the Lysol wipes. You know, that's another coveted item. Because I mean, honestly, I'm like, are we gonna ever see Clorox or Lysol products on the shelves before the end of the year? I mean, that truly was.
I don't know. Hey, take your view on Zoom off or speaker view so that you can have a side-by-side camera if that's what you want, or do you want it on speaker view?
I don't. So
okay. You need to go to gallery view.
Yep, I got you. I'm on my Mac. I'm on my Mac.
So some of us don't have Macs.
I got the MacBook and the desktop.
Good morning. See, if you just had a simple PC, none of this would be.
I do.
Let's go.
The simple PC doesn't work like the Mac during these times with the high Wi-Fi usage. But anyway.
Okay.
Without further ado, good morning once again. And thank you, Queen of Mortgage, for joining me again this Saturday morning with Ask the Lender. So for those of you who are on or getting ready to join, good morning, Stephanie. Markita, I think you know Stephanie. Stephanie Mann.
Hey, Stephanie.
So this week, again, we have Markita Woods, affectionately known as our Queen of Mortgage with Fairway Mortgage. And I got a couple questions for her this week. And please feel free to comment below. She and I both are monitoring. So we'll be happy to answer your questions. This week, Markita, one of the things I heard, and I'm not sure how accurate this is, but it did lead me to another question about appraisals. So there was a rumor or supposed rumor, and maybe you know about this, that mortgage lenders don't need to appraisals until after maybe to up to like 120 days after a closing. And then I heard that if that is the case, that's only for like maybe credit unions or direct lenders who are keeping the product in-house. I mean, I'm not sure, but I'm like, can you put some clarity to that?
There is exactly, yes, there are absolutely some words out there about this 120 days. Most non-bank lenders, we are not following that. So that is 120 days until after. This is something that banks are looking to do. Credit unions that will put the loan into their own portfolio and service it that way. So up to 120 days after closing. So that's really not in play in your mortgage market for the most part, for most of us, on how we're going to do an appraisal and actually look at lending. And you know, something about that, just, you know, my thought process with something like that, I find that very risky.
Exactly. That's exactly what
I'm like, I don't know if I would like that as a buyer. And maybe as someone refinancing, as a seller, a homeowner would be okay, but as a buyer, you know, it's kind of after the fact. So I guess the bank is looking at it as a long-term play. If they find out that the value really is not there, that, you know, the person either will be in the house so long, or also look at the bank standards too for lending. Of them asking for 20% down, so there's already something built in to the home anyway. So if it didn't appraise, it means the spread is just not as big. So yeah, I don't know that I would like something like that, but I understand why the response is actually there, or something that they're trying to do while we're getting through all of this.
To me, that would be the equivalent of buying a house without a title search as a buyer. It's like it is a huge risk, and then for you guys, I mean, and you know, anyway. I appreciate the clarity there, which also, you know, we're doing these, can you expound a little more on the drive-by appraisals? And
Yes.
do they own, let me see, how do I access? So on the drive-by appraisals, and do foreclosures qualify for a drive-by appraisal?
You know, that's an excellent question. And I have a very specific scenario where this exactly happened. And we weren't sure, right? We knew that we were doing the drive-by now. So basically before, if you had a house appraised, the appraiser would come into the property, see if there's damages, cracks, leaks, you know, they would measure the size of the rooms, just make sure everything was in order. So they would actually physically go into the property. But now with the pandemic, all of the agencies, as far as conventional loans, FHA, VA loans, have allowed the exterior only and to do the appraisal report with other information that can be found online. But right now, so much data out there anyway that I don't find that to be too risky, because you can find out so much information now. These days, the Big Brother is everywhere. So this particular property we had, it was a foreclosure purchase, and there was some back and forth about some drywall in the property and whether it would be cited as a FHA repair.
Mhm.
And I was like 100% sure once I saw the pictures that absolutely this is going to need to be repaired. This is, you know, it's a bank-owned property.
Mhm.
It wasn't anything huge. Some very small slats of drywall needed to be replaced.
Okay.
The appraisal came back as is. So surely the appraiser never went in. He had to do an exterior only appraisal, because that, like I said, missing drywall, FHA in a bedroom, we know that's going to be repair that you need done prior to. So yes, bank-owned properties account, and that house was vacant, but he chose to do the exterior only. So that actually worked out in our favor.
That's interesting. So I'm actually in the process of closing on a bank-owned property, and the lender required that. I mean, they require a physical appraisal.
Okay.
Which was interesting because this appraisal took more than 25 days
Uh-huh.
to even go and do in fact, we had to extend settlement because it took so long for the appraiser to get out to actually go and appraise the property. I mean, are you seeing that as also being a challenge, like lack of appraisers?
I will say that I do feel like appraisers have a situation where they're hitting capacity, just as far as the bulk of refinances. Many of those still required an appraisal, even though we were getting what's called property inspection waivers, where we didn't need the appraisals. But we don't have a lack per se at Fairway, because we do have a panel of appraisals that we manage.
Yeah,
So we're able to typically, round robin and send each report. I mean, so we're still looking at about 7 business days unless there's some extraordinary circumstance there. Now on the VA side, I have had a couple that have taken their full 10 business days and still needed a couple days after that. And you know what? I was perfectly fine with actually giving them grace, because this is an unprecedented time.
everything.
And wait, and it still worked out for the value, but everybody just needs to be on the same page. Like, we just got to give a little more leeway, because like I said, you've never seen the numbers. I think I had quoted them on my Wednesday. I had did a call, just ask me anything. And I want to say that at right now, so I think for the year, maybe 1.2 trillion in refinance volume is typical. And then right there in 1 month, you have 1.5 trillion.
Yeah.
So yeah, imagine, like, it's a trickle down effect from the lender saying, I need this appraiser, to the, even to the title company, and, going to closing. So it's getting, we're clearing the pipeline out.
That's good. That's good. Kind of like unemployment too, but we won't talk about that this morning.
Oh my God, that's a whole nother
Conversation.
Definitely not ready for the self-employed borrower to be able to come into their system. I just think it's very unfortunate, though, that people actually need the money, have paid the taxes. I mean, it's like, these are the times that things need to work, and they just don't. And it's not cool on so many fronts.
It's so sad. It's it's very sad right now with the way everything is going across the board. Staying in
Yeah.
that same vein, well, sort of, what about termite inspections? Because I was surprised that one of the lender, waived the termite inspection. Is that something you're seeing or that you guys are doing?
No, we are still requesting the termite inspection unless the property is a condo that's up on the second level or higher.
This was a single family. I was told.
Yeah, so we're still requesting termites on certain type of loans. So FHA and VA, we require termite
Sure.
inspection.
Well, this is conventional, so maybe.
Okay, so yeah, not needed. Okay.
Okay. Well, all right, cool. So let me see. Any questions yet? No, not yet this morning so far. But let me run right into my next one, since we were talking about, unemployment and especially, like with our self-employed folks and, needing some, in your words, grace, which I love very much. But what about mortgage credit and availability? Like, can you speak to the direction that you see things going in terms of, tightening the requirements for the borrower? And then this is two-part, then also the financial strength of the mortgage institution or in the banks specifically.
Okay.
Like stricter guidelines. How are things going? And I know you've made a post in one of our private groups also,
Yes.
talking a little bit about that. Can you just elaborate on that some for us?
Absolutely. Absolutely. There is quietly in the background, there's a huge fight going on for, non-banks and banks to make it through this time or whatever. And it's almost unfortunate because this is an external factor causing issues in the housing industry. And clearly housing is what is going to lead the way. When we get out of this recession, housing will be the industry that will lead us out of the recession. So it's like a catch-22, and it's very unfortunate that the same entities that should be helping us keep things going, we're actually in a quiet fight on the back end. So what's happening is I do think people should have the right to forbear payments if they actually need to, and have an opportunity to get back on their feet. If you've been told that you cannot work, then you cannot pay your bills, then you definitely deserve an opportunity for forgiveness.
Right.
Well, not forgiveness, but a chance to skip those payments, because forbearance doesn't mean it's forgiven. You still have to pay it back at some point.
Or just tack it on to the end of the loan, but the balloon.
Exactly. Let's just do that and be done with it, right? Which still has consequences later, but that just seems like the broad-based easiest thing to do and move forward. So because things have been unclear and because boots on the ground always have a different experience from what the policymakers say or do think is going to work, it comes out and then it causes a whole perfect storm. So we have some liquidity issues based on the number of forbearances coming in. And as a result, what happens is non-bank lenders, such as your Fairways, your Movements, your Embraces of the world, G-Rate, whatever it is, we usually sell our loans to these loan servicers. And right now the servicers do not have liquidity to purchase loans, or they only want to purchase certain types of loans at this point because they're not getting paid for all of those loans that are in forbearance. That's money not coming into them. So between early payoff of refinances, like, people refinancing, early payoff, and then this whole forbearance thing, we've caused a liquidity issue in the back end. So as a result, unless the government decides to get off their hands and do something about it, it's going to be a problem. So what you have seen as a result of that backstory is that certain loan types, everybody has tightened their guidelines. And I don't want to say everybody because that's just so general. Many lenders have tightened their credit score requirements now, okay? Because typically you already deem a government loan to have more risk, especially FHA that have more risk, even though that might not necessarily be the case. Maybe they just have a higher debt to income ratio, even though they have great credit. So, you have banks starting at Fairway, we're starting at 640. And before at 580, very easily. You did a 580 loan for someone using FHA. So now we are starting at 640. You have others that have gone up to 680 for an FHA loan, even all the way up to 700 for these loans. And this is overlay from the lender. It's not necessarily the FHA as a whole has changed, because people thought, well, dang, is that loan going away? Can I even do that now? Or should I just be looking at a conventional loan, which if you have higher credit scores, then you definitely should be, but the scenario just has to match. So there's various reasons why we do that, using FHA loans. So it's not going away. The credit score requirements have just gone up overall.
And that is with FHA. And as you mentioned, just for clarity, FHA has gone up, but also the lenders have their own internal guidelines in terms of.
So FHA has not gone up. It's all the lenders. It's the lenders deciding that we only want these loans above 640 with a very specific debt to income ratio, no matter what the desktop underwriter says. Or we want to see that after you close, you have 2 payments of your house payment, possibly, that can be liquid. So these are all late overlays is what we call them, but they're all being added by the lender. These are not sweeping changes to the guidelines of a FHA or VA.
Got it. Yeah. So their 620 is still there. What about that 580? Remember that was.
It's gone.
Well, it's definitely a lot of numbers.
Hey, that means you got to get your credit in order these days.
Got to get it in order. Period. The end. Yeah.
Yeah.
Okay. Sorry, I cut you off.
That's all you.
So okay. So talk to me about some of the. Okay. So I understand that the overlays that are specific to the different lenders.
Yes.
What their guideline, what they're willing to do, and the risks that they're willing to take. Give me some examples of some. I mean, we know the credit score. What are some of the riskier loans that in the past or before COVID, pre-COVID, whatever,
pre-COVID,
yeah, where we are now, like during COVID, like what are some of the guidelines or some of the strict or restrictions that have now been put in place, and what has gone away? Like, do we have any of these, what about these grant programs that were once available to, say, first-time home buyers or some of our first responders or our teachers and things like that? Are they still out there?
That is a very excellent question. So I'm probably going to have 2 answers to this. The bond programs, this down payment assistance program, they're still lending. It is open. It is still available. However, you have, once again, certain lenders have decided to not offer the product or temporarily suspend the product for a time period, because that is a higher risk loan. If you don't buy the loan from you, you have nowhere else to sell it. It's a one-shot pony, right? So it's still available. It's just certain lenders have put a pause on actually doing those type of financing. At Fairway at this time, we are not doing down payment assistance, unfortunately, as a company. So there are other lenders that are still offering it. And right now it's some short-term temporary pain, but it's all about the bigger picture. And every company has to decide what their appetite is for risk and where they'll be able to come out at on the other side. So that's why that's happening. Now, something that happened, and this is very unfortunate, especially for someone like a realtor or a small business, which my heart just goes out with all of the drama, of not receiving
bartenders, your servers, all the people that,
But what about all these small businesses that didn't even get any money that was appropriated to go to them?
But we knew that amount that they allowed was still never going to be enough to.
Never. I know,
everyone.
But
it was just
But do you know anyone that got through? Like, I don't know anyone.
No.
Huh?
I don't.
No.
Well, no, I don't personally.
Me either.
No, personally, no. I know
No.
I really didn't get
it. Right. So I've always felt it's been difficult for self-employed people to purchase a home, just because of the way the taxes are set up, the way the guidelines set up, gross profit one thing, adjusted income another, based on write-offs. So I think it just got incrementally harder for self-employed to purchase a home under your normal loan types. Now, we had a stopgap for that here recently, where we started offering some products that were different, such as, bank statement programs and things like that, where if you could show you were receiving the money, then those deposits could be used as income. Those are really off the board again. Wow. So I do feel like the self-employed is taking a hit again on just purchasing a home through the normal channels of FHA, VA, or conventional loans, just because of everything that's happening. You have lenders changing the guidelines, already reducing the income by an additional 25% in some cases, which if you already had written down income, like, based on your write-offs, and then another 25%, it just becomes too hard to actually qualify. So it's either, do I owe the IRS, or do I put a large down payment on a house? So I do think that I know that area is severely impacted. And then our lending at loans above 765, 500, 600, whatever that is. I can't remember the exact numbers. It's too many numbers, but above 765,000, that market is just slow to a crawl. So, and it's called jumbo money. But that market is pretty much slow to a crawl, with all investors halting and pulling out now. And I do believe it's temporary, but I think my biggest concern is for the self-employed and the impact of this, for the, it's like, hey, I don't know.
Oh, even when we do start going back, especially like in certain industries, we know that there's definitely going to be a shift. Like, for example, hospitality. Again, the restaurant business, are we be comfortable going back? And if and when we do, like, I really do miss eating out. Yesterday, I was like, dang, Friday, I just want to go out and have a meal, sit down. But when things come back, like, how are we going to do this whole social distance? At least until there's a vaccine or something in place, how is that going to play out? Hospitality. I mean, like, if it's mandatory that you have to travel, but everything's going to be shifted. And now that we've entered the world of virtual, fortunately, a lot of us have been doing this before COVID.
Exactly.
But, now that the world is starting to embrace this, virtual world, what are we going to do? We just know that we can't virtually go eat. But I give you an example. I had to go out and anyway, I was up in Arlington, and Lito's Pizza. I'm not a pizza person, but there are two places I do like pizza from.
I would say you're not a pizza person. Oh no.
Like that. Not really a pizza like that.
One of my faves.
Yeah, my family too. So one is in Front Royal. It's a place called Melting Pot. Now I can eat theirs all day, every day. That's really yummy. But anyway, there's Lito's Pizza, right?
Okay.
And so I like Lito's, but what was unique about that is you can definitely order, but when you open the door to go in, and it's a carry out anyway, this particular one, they have the guy stationed literally at the door with the plexiglass suspended in air. You cannot, and anybody else waiting to go to get their pizza, they have to wait outside before you can actually even go open the door just to interact with the cashier. But I'm like, wow, what happened there? But it's, again, we digress. Just nobody knows how this is going to play out. But right now it's we're talking about the different price points. I'm noticing, which we've entering into this whole COVID atmosphere, we were already, struggling with supply. There was, low inventory. And even now it's even more so stressed as far as not. So, going back to the fact that this is a health crisis, not a housing crisis, because some people are really, really freaking out, but how this can impact the housing market or, going forward, because it's certainly impacting our economy. We just look, again, going back to unemployment, but we just have to adjust, I guess. And unfortunately, yes, our self-employed people, yours truly included, it really is an interesting twist in how, we just have to see how we're going to come out on the other side. Markita, I really appreciate this time with you. I'm not going to keep you, all morning long, but one last thing I want to ask, and I didn't jump in before we finished, we're closing that one subject about the guidelines and with the grant money or that money, have those programs like say VHDA or any of those, have they changed or tightened their lending guidelines, or are they still the same? It's just finding the lender who is willing to, take on that risk.
I have not seen theirs change. I did see a change to the mortgage credit certificate that came through, but I have not seen their minimum requirement scores change. So again, it is about just the lender deciding whether they want to continue to do those loans in this environment, Some lenders have decided to do the loans, but still added their own overlay to it, even though VHDA themselves have not formally said anything as far as that goes. So the mortgage credit certificate basically has reduced some. So it had reduced versus, I think it was like 2,000, now it's down to 20% down to 10%. So still a very good program to look into. I mean, anytime you can get a tax credit.
Right.
You're like, look, that's the one thing we know we're guaranteed to pay are some taxes. Then that's something that's very, very helpful. So yes, they have not made those formal changes. That's an excellent question. I would still say, just in closing, that it is still a great time to plan to buy or buy, and definitely look at refinancing higher interest rate debt into a low interest rate climate, because I feel like we're going to be in this climate for quite some time. I know that, Tracy had mentioned the new normal. There is going to be a new normal, and there is going to be a sector of people that are ultimately not going back to work after this happens.
Oh, that's an unfortunate truth. That is,
because they have found out too that, things can be done in a more streamlined process. There is going to be the social distancing, so the people are just not going to be needed. And as much as we've always used technology, I've always been a video person. We've always done Zoom. It's not a new normal for me. It's always been part of what we've done, just because I find people to be very busy.
Yeah.
Don't want to travel, and traffic around here always has been a bear. I land in Virginia, Maryland, DC, and Georgia. So somebody from Georgia is not coming to my office either way, but still want to have the interaction face to face. The flip side of that for me though, and for us as just overall, is that so much of these things can be accomplished is that technology is going to be an enemy of some people too, that not be going back to work based on the fact that technology can't actually do their job or fill an actual stopgap. So yeah, just the reality.
That's true. Well, Queen, I appreciate you once again, and I look forward to our chat next week. And again, everyone that is on, thank you so much for joining us. If you're thinking about refinancing, or if you guys have any questions where you stand, or are you ready, you want to plan and prepare to purchase after COVID, now is a good time, as she mentioned, to start looking at what's out there. One of the takeaways I will say is, certainly with the overlays, keep in mind that yes, credit score requirement is greater. And then also having some down payment money, being able to show that you have some reserves rather to support, your new purchase, and also what the new guidelines are for the lender. Markita has been tagged in this, so feel free to message her. Always feel free to message me. Go to our website, and thanks for joining us, and we'll see you next Saturday.
Hey, and thanks for having me, Jen. And I'm looking forward to some data next week from you. Just let us know what's really happening. Like, we're telling people it was a great time to buy, but we want some information next week. All right.
Absolutely. Yeah. So next week we're going to bring some numbers and kind of let you guys see where we are in prior and where we are currently with regards to inventory. And in the meantime, feel free to hit me up. Don't wait until next Saturday. If you have questions, and let me know. Right now, I'm going to tell you, definitely values have not dropped. So that is not a problem for my sellers. And for the buyers, as Markita's mentioned, even though credit score with some of the lending requirements or the overlays have changed slightly, it's still the interest rates, Markita, they're still very, very good. So it's still,
oh my gosh, they're excellent. They're excellent right now.
So if you have to move, or you were planning to move, still take advantage of these low rates, so that there's positives on both sides. You just, as a buyer, just know we might be out here fighting a little bit to find that perfect house, but nonetheless, it's still available. And for my sellers, you have not lost your value. In fact, that's again the difference between this market and 2008. This is not a recession, guys. This is not a housing crisis. Our values, and we've got a lot of families out there with equity, but we'll talk about all that next week.
Okay.
Soon,
all right. See you.
Join us. Thank you again, Markita.
All right. You're welcome.
All righty.
Bye.